What's going on, guys? So today I finally have a stock market video for you guys. Very soon I'm going to be creating my top stocks for the year, and very soon I'm going to be showing you guys my portfolio and explaining to you guys why I'm going to be selling a bunch of my companies. And I've already sold a lot of my positions, and I'll be talking about that in the future. But today I'm going to be talking about all these hype stocks we're hearing about: AMC, GME, and the new one is SNDL. I'm going to talk about these companies and how one of them can potentially make a run, and I'm going to show you guys why I think that. But before we get this video started, don't forget, give me a thumbs up, hit that notification bar if you're new here, and smash that subscribe button. Also, if you have not checked out my last videos where I'm exposing what's going on in this world. Also, I just want to bring something up real quick. I want to ask you guys, if some of you out there just feel like something is off with the whole beer bug, with everything that's going on, if you feel like something just feels wrong, something just doesn't add up, then I strongly encourage you to watch my last video. I'm going to leave the link in the description below, or we'll have a link right here. You can watch it real quick, come back to this anytime. At the end of the day, everyone's entitled to their own opinion, but I do encourage everyone to have an open mind to everything that's going on, and maybe accept that nothing is what it seems like. So the first company I'm going to be looking at is Sundial, ticker symbol SNDL. But unfortunately, first I'm going to have to talk about why I don't like this company. So Sundial's market cap is $1.9 billion, and they have 1.06 billion shares outstanding. Now, if we look at their income statement, in 2019, Sundial only made $57 million. But unfortunately, the news gets worse from there, because their net income was negative $204 million. And if you look at them year over year, in 2016, they lost 1.18 million. 2018 they lost 52 million, and then 2019 they lost 204.5 million. So it seems to me that every year they're losing more and more money. So now let's take a look at them quarter over quarter. Maybe things might get better. In Q4 of 2019, they made 16 million total revenue. So in Q1, they made 17.1 million. In Q2, they made 14.5 million. And in Q3 2020, they made 9.65 million. So since Q1, you notice year over year, their revenue is actually dropping, which to me doesn't make sense, because if you look at the charts, we're going to go back to the charts real quick. So if you look at the charts in the past year, this company has been very volatile. But if you notice lately, this company has actually been on a nice little run, which doesn't make sense if you look at their numbers, like I just showed you, when their company's revenue is consistently declining quarter over quarter. So I do understand that this is one of those YOLO stocks to the moon. So just based off that makes me realize that this right now is a speculative hype stock, and at any moment this stock can drop, like we've seen it drop in the past. I've actually called this out in my Facebook group not too long ago. So I created a Facebook group called Investing Hustlers Stock Market Plus Business Entrepreneurs. It's absolutely free. Anyone can join it. The link is in the description below. I talked about SNDL, so let me know your thoughts on this one. Here are mine. Market cap 1.8 billion. Total revenue in 2019 57 million. Net income lost 204 mil in 2019. 2020 isn't looking much better. The only thing that looks good for this company are the charts. I just want to warn you users, this is a strictly speculative play. This company can continue going up in the short term because of the MJ hype, but I consider this a high risk investment. This was like when Sundial was like on a nice little run. I think they had one more hot day where they shot up and then immediately shot down. And right now I'm starting to see a similar pattern with the charts of SNDL that I've seen in the past, which I also called out on my stock market group. Just some advice for AMC YOLOers. AMC is currently downtrending with a support line at $6.60, forming a triangle pattern. There will be a breakthrough soon. It will be either in the upward or downward direction. If AMC breaks through in the downward, they can go as low as 520 resistance line or 330 a share. And this was on February 6th at 12:40 a.m. What I was saying at this point was that we see a triangle pattern forming, and it's squeezing tighter and tighter inside this little triangle, which usually means that we're going to see a break. And if you look at the 5-minute candles, you can see right here, we had a nice breakthrough below the support line right here. And I also did call out the next support line to be at, if we look right here, they came pretty close to this support line right here. But as you can see, AMC is slowly creeping down to this support line like I called out in the past, and I called out this triangle pattern. And right now I am also calling it out again, but except it's with SNDL. The thing about these breakthroughs is you don't know whether it's going to go in the upward or the downward direction. The way I usually play these breakthroughs is, if I'm confident in this company going in the upward direction, I will start a position
I'll try to start it right here because we're right here at the support at around 172. So even if I could get it for a little bit less, I'll try to do it. I have a stop loss. I would consider my stop loss probably at 160, because if it does break through in the downward direction, we could possibly just continue downtrending and go back to the support line here at $1.26, which no one wants to see. Of course, if you're invested in SNDL, we all want to see it bounce off this support line right here and continue uptrending. I still think it has potential to make a nice little run. With Sundial, we had a nice gap up, a huge gap up, and usually what happens when we have gaps up, they get filled. So right now SNDL was downtrending, so that gap got filled. But don't forget the risk of it downtrending and going all the way down here. But remember, this is all strictly my opinion. I always encourage you guys to do your own homework and invest at your own risk. And if you guys want, we could take a quick look at the next YOLO hype stock, which was GME. And this one's just skyrocketed up here. And obviously the reason why AMC did drop the way they dropped is because it's simply overvalued. This company is not profitable. Their market cap was way too large. I think even the CEO sold some shares. Even they knew the company was way overvalued at this point. And if we look at their financials, it was a little bit rocky. In 2017, they weren't able to make a profit. In 2019, they weren't able to make a profit. And of course, quarter over quarter in the last few quarters, they were losing a lot of money, mostly because of the whole lockdowns and COVID, and probably because of the new orders going around the world, if you know what I mean. And all this right here, it was just a lot of hype. And of course, it was a bubble. And of course, this was going to drop eventually. So the same thing happened with SNDL, and I'm just putting it out there that this one has potential to run. And also, if we do look at the post market, in the post market, they were up 4.65%. But just remember, sometimes we might have a very hot morning and then a quick pullback. I guess keep an eye out for this one tomorrow.
Anyways, one last thing, don't forget SNDL, very high risk stock. These companies are very volatile, so always make sure to invest at your own risk. Do your own due diligence, do your own homework, and don't forget to smash that like button. Don't forget to subscribe and hit that notification bell. Bye bye.